Morning, guys. You can see time is around 7:49. Let's look into Wednesdays and Thursdays Bitcoin trade analysis, guys. So what we need to see here is that first let's look into a higher time frame analysis and see here. The small doji candle over here is the Wednesdays and this is Thursdays, guys. Before that, what we need to see here, in case if this candle has not yet formed and this candle has not yet formed, you can see this is the swing high over here, the buy side liquidity over here. What happened here is that the market swept this high, guys. You can see the previous high, the market swept here and closed within this range. And you can see there is some fair value gap where the market mitigated. So the market swept the previous high, guys. Over here, you can see the market came. In my previous videos, I have told you that the market will definitely go very bullish, targeting this high, this high, this high, and this high. If you go watch my previous videos, even before this candlestick formation itself, during this period itself, where I told you definitely the market is going to hit these levels, and even this level and this level as well. So better to look for long side itself. And you can see after this kind of huge bullish momentum, the market consolidated for a period of time. And you could have expected that the market might reject price from here and break these levels, guys. So that though will never happen because whenever the market shows expansion, consolidation, and reversal, though will never happen, guys. Expansion and further expansion only will happen. For the market to reverse and continue further selling, guys, what a different level of price action needs to happen here. But you can see clearly here the market broke this 200 moving average and price trading above the 9 as well as the 21 moving average. In case if the market guys on a daily time frame is trading above the 9 moving average, you can see price rejecting. It clearly signifies bullishness, guys. Whenever the market touches the 9 moving average and shows some kind of rejection, it clearly signifies bullishness. So you can see here this candle over here which broke the 9 as well as 21 moving average over here and closed below these levels. This clearly signifies bearishness over here, and you can see this candle over here where the market swept this liquidity below, formed a doji candle, and here you can see this candle which broke 9 as well as 21 moving average and closing above these levels. Here you could have taken long position and you could have targeted this high and you could have targeted this high as well. And you can see you could have targeted this low, this low, this low, and you can see the market came all the way to this fair value gaps and came all the way to this level as well, guys. So I hope you're understanding a single candle which clearly signifies what the market momentum actually is telling about. And about the daily time frame analysis, guys, what I would like to mention to you, this is the buy side liquidity over here. So you can see after this kind of huge bullish momentum, the market rejected price from these levels and market rejected price from this level, the high of here, and closed within this range. And for the next day, what you could have targeted is this low over here because the market swept this high and closed within this candle range, and you could have targeted this low. And on the next day, you can see the market came all the way to this low and broke this high as well. Rejected price from these levels and closed within these levels. And for the next day, you could have looked for this target levels and even this target level as well. You can see the market swept both these liquidities and closed within this range only, guys. And you can see the market swept these levels and closed within this range. So you can see this is one buy side liquidity and this is one sell side liquidity over here. This is the sell side liquidity. Here you can see the market next day formed a doji, which is a quite indecision candle. And what you can see on the next day, the market swept both the high as well as low and closed below these levels. So you could have expected the bearish momentum itself. You can see after this kind of doji candle, guys, what happened is the market swept this high over here and closed below these levels and even closed below the previous candle low. But all this is happening within this candle, this first candle's range only here. And you could have targeted this low. But what happened is that the market came, swept this previous low as well, the sell side liquidity, and closed above this range, clearly signifying some sort of bullishness. So the next target, what you could have expected is this liquidity over here. The buy side liquidity is what you could have expected the market to be here. So this is one buy side liquidity. So for the next day, you could have either expected this momentum, but you can see the market formed a doji over here, insider candle. And what happened is that the market next day swept this low and closed within this range, clearly signifying some sort of bullishness. So you could have easily targeted this high. On 14th, you could have targeted, sorry guys, on 1st of May, you could have targeted this buy side liquidity and even this buy side liquidity, and you can see this kind of bullish momentum. So I hope you're understanding, guys, what I'm saying. When this sell side liquidity has been taken and swept this liquidated and closed within this range, guys, you can see how the market swept below these levels and showed some kind of huge bullish momentum. And after this kind of candle, what you could have expected is to take another candle which breaking above this level as well. So, but what happened is that the market formed an insider candle, but market failed to sweep here. Guys. Since the market has already swept this low, there is no point in market sweeping this low again. So the market came all the way to this demand level over here and even swept this low and closed within this range guys over here, clearly signifying some sort of bullishness. And after this candlestick formation, what you could have taken expected is that the market to break these levels, even this level, and you can see even this level as well, the buy side liquidity over here as well. So this was another buy side liquidity where you could have expected the market to break this, and all the way to this level as well. And you can see in case if you try to plot the low to high of this candle, the market is trading above the 250 levels of this retracement levels, clearly signifying some bullishness. And the market didn't show any retracement only, guys. You can see the market closed to this level and showed a very small retracement and rejected price from these levels and continued further bullish. So I hope you're understanding. So let's look this in a 15-minute time frame and see how you could have targeted. So this is the sell side liquidity, guys, where the market I told you came all the way to these levels, the previous low, swept this and showed some kind of huge aggressive momentum, where the market clearly formed a chalk over here. You can see a market structure shift, you can consider it to be. And what I have already mentioned in this previous video is that if you consider the common point between this to the common point between this, guys, so you can see the market came all the way to these levels over here, the 0.5 as well as the 0.78 level over here. You can see this is the level where the market came. You can call this to be an optimum trade entry zone. And the market showed some kind of bullish momentum where the market failed to sweep this high, guys. Instead, the market consolidated. And what happened here is that if you consider this buy side liquidity, let me see this. I haven't plotted this correctly, the buy side liquidity over here. So let me be very accurate in this. Okay, so I got it. So if you look into a 15-minute time frame now and see, you can see here what happened is the market reached all the way to this optimum trade entry zone over here. And the market here, guys, came all the way and failed to make a higher high. And neither market swept this high also. So you can see clearly the market formed an equal, failed to sweep above these levels, but showed some kind of rejection. But I have explained you this trade, guys, on Tuesday. But the market came all the way to these levels. So what you can see on Wednesday as well as Thursday is what happened is that the market came over here and there was some kind of inducement level over here and there was some fair value gap here, which I have already mentioned to you in my previous video. You can see the market here, there is some fair value gap where the market failed to mitigate this fair value gap, guys. You can see here, and order block level as well. You can consider this to be a 15-minute order block. So, or in the 5-minute time frame, if you see, definitely you can expect, you can see here, there is some fair value gap over here. And see this fair value gap. The market came, mitigated this fair value gap and rejected price from these levels and continued further. And you can see this is another sweep in liquidity where the market swept the buy side liquidity and immediately rejected price from these levels, clearly signifying bearishness. So what you could have expected is that the market, guys, here formed an order block level over here. You can see this is one order block level where the market here. But what we need to see here, guys, is market moves in search of liquidity. I think order block levels also definitely play some kind of role, guys. Even if you consider this order block level, guys, you can see if you consider the last up candle over here, the market did clearly broke this order block level here. So there is no point in considering order block, guys. What we need to see is liquidities only. So in daily time frame, which I have already mentioned to you, how the candlestick formation happens in a higher time frame. You can see here the market here formed an insider candle. Definitely on this insider candle, there is no trade opportunity. And you can expect that after this kind of rejection of price and market closing between these levels, guys, after this kind of candlestick formation, you could have expected the market to reach all the way towards the upside. And on this day, you should look for buying opportunities, guys, only after this kind of confluence candle. On this day, you can see there is no confluence over here. And on this day, you could have definitely have some confluence because the market rejected from this sell side liquidity and closed above these levels over here. And you could have targeted this high. But what happened is that the market failed to make a higher high. Instead, the market again formed an insider candle. And again, market came all the way to these lows and continued further bullish. So you should definitely look for good trade opportunities, guys. But let's see what happened on Wednesday and Thursday, guys. Let's decode the trade. So you can see there was some kind of impulsive momentum towards the downside, and this is the last up candle, guys. So in a 5 minute time frame, if you go, it's better to explain in a 5 minute time frame. This was the last up candle which broke structure towards the downside, and you can see the market swept this liquidity, and immediately the market formed a chop over here. You can see a clear break of structure over here after sweeping this buy side liquidity over here. Not this, guys. This is after I have. This is what I have plotted after this momentum. But this is before, guys. You can see this liquidity over here is what I'm explaining. The market came and swept this buy side liquidity, rejected price from this levels, and clearly formed a chalk over here. And what you could have considered is that this high of this candle, the common point within this, to the common point within this, you can see the market came all the way to 0.38 level. You can see this is a 0.38 level where the market came, rejected price from these levels and continued further selling. Or you could have even used this breaker block level as well. You can see this candle over here is where the market came all the way to this level. Or you can use this also, the last down candle only, to consider the breaker block level. But it's fine, guys. What you could have considered is that the market rejecting price from 0.38 level. So in case if you try to plot the Fib extinction levels over here, the common point between this, to the common point between this, to the common point between this. So you can see exactly the market came all the way to 1.68 level over here. This is how you could have targeted the 1.68 level, keeping your stop loss just above this candle itself, guys, and targeting it all the way to this candle over here, down over here. And if you look into a 1 minute time frame, and I will show you how you could have taken this trade over here. You can see the market here came all the way and showed some kind of huge bullish momentum. But what you could have done is either you could have plotted the anchor gap level over here, and you can see this candle over here which broke structure towards the downside, or even the high of this candle. You can see this is the high. You can see this rejection of price from these levels, clearly signifying bearishness. Or in a 5 minute time frame, if you consider the high of this candle, you can see the market rejecting from these levels, clearly signifying bearishness. So either you could have used anchor gap levels to take trade positions, and you can see this was one trade opportunity where you could have taken. And the market here also, guys, what happened here is that if you look into a daily time frame analysis, you can see the market made a low over here, mitigated this fair value gap and continued further bullish. So let's look into a daily time frame here, guys. I want to see why I have plotted this level over here. This is optimum trade entry zone. So this I'm not getting it, guys. So what exactly? I think this is this low. I think the market sweeping this liquidity and continuing further bullish. So yeah, this is how it should be. So okay, you can see the market here swept this low. You can see the market trying to be bullish, guys, over here. After this kind of huge bullish momentum, the market here swept this liquidity above these levels over here and continued bearish. I have already mentioned to you, and continued bearish over here. And immediately after this 1.68 level where the target has reached, guys, so you should look for either, you can see there was some fair value gap here over here. That's why the market had come here, guys. You can see there is, if you consider the common point between this to the level of here, there is some fair value gap over here. And if you try to extend this fair value gap, you can see, guys, exactly it came at this fair value gap, mitigated these levels and continued. And whenever you find this kind of aggressive pullback, guys, the market, after the market showing a huge bearish momentum, you can see the market, how aggressively the market showed some kind of bullish momentum where the market even broke this structure also towards the upside. So what you could have looked for is that whenever you find some aggressive pullback, guys, what you see, the market clearly showing, sweeping this liquidity and showing aggressive momentum towards the downside, and immediately aggressive momentum towards the upside with same kind of momentum, clearly signifying bullishness. So if you try to plot the low of this candle to the high of this candle, so you can see the market here taking support from 550 levels, or there is a fair value gap over here. That's why the market came and took this support over here. So this is the 550 level where price is taking support here, guys. And after this support, guys, what happened is that the market again broke structure towards the upside. You can see a clear break of structure here. And if you consider this swing momentum over here, where again the market broke structure towards the upside, you can see this kind of break of structure, guys. And if you consider the order block, you can see the market came and mitigated this order block over here. This is a clear 5-minute order block. And after this, the market again broke structure towards the upside. You can see why you could have taken positions over here, guys. See, the market sentiment is clearly bullish only. And break of structure. Again, the market retraced to optimum trade entry zone over here. If you consider the high to low of this candle, the market retracing back to this fair value gap. So you can consider the optimum trade entry zone over here, and which is in confluence with this fair value gap over here, fair value gap and this optimum trade entry zone. Either you could have taken your, after this kind of momentum, guys, either you could have taken your position here, or even you could have taken your position here. So in case if you could have considered your position here, guys, when the market reaching to this optimum trade entry zone, and try to plot the fib extinction levels over here. So if you try to plot the low of this candle to the high of here, to the low of this candle, and keeping your stop loss just below this level itself, and you could have targeted it all the way towards the upside. You can see either you could have targeted the levels, or either you can expect the market to go bullish, guys. So you could have targeted the 2.6 level over here. You can see exactly here is where the market reached and rejected price from this level. As you can see, guys, the 2.6 level. I hope you're understanding, guys, what I'm saying. Again, what happened is that the market came and retested the swing high over here. As you can see, if you consider this momentum after the market showed a huge aggressive momentum and retest, guys, break and retest. And you can see whenever the market breaks some levels, guys, what happened is that whenever the market aggressively breaks these levels towards the upside, what happened is that the market comes and retests these levels back and continue further bullish momentum. This is what happened here. And you can consider this zone to be a breaker block level. You can see this was buy side liquidity. And you can consider this to be a breaker zone level, breaker block level as well, where the market broke these levels and retested here. You could have considered this to be a retest, but this is not a retest, guys. You can see this kind of consolidation. Retest is this, guys, where the market didn't even fail to retest these levels properly. But exactly here is where the market retested and clearly broke structure again towards the upside. You can see clear break of structure here. And what you can consider, if you consider the low of this candle to the high of this candle, you can see the market here reaching all the way to this optimum trade entry zone over here. This is the optimum trade entry zone and this 200 moving average support as well. So either you could have taken your position here, guys, keeping your stop long position here, keeping your stop loss just below this candle. And for the first target, you could have targeted these levels over here, or in a higher time frame, what you can see is that there is a lot of fair value gap over here, as you can see. So if you look into a daily time frame, daily fair value gap levels, you can see there is no fair value gap, guys. You can expect the market to come next all the way to this levels, guys. So definitely you can expect the market to come all the way to these levels, even breaking this level, guys. So this is one buy side liquidity. So definitely you can expect some kind of reaction here. So a bullish momentum only, guys. So definitely the market's gonna come all the way to these levels over here. And taking your long position and targeting it all the way to this level, which I have already marked here. So this is the level which I am targeting. The first target is this liquidity over here, guys. This is one liquidity. This is one buy side liquidity. So you can target this initially and you can expect further bullish momentum. So I hope you're understanding, guys, what I'm saying. Why you could have taken a long position. But what happened now, guys, one thing is that I want to share you is that after this kind of liquidity, guys, where the market over here came and swept this high over here, you can see this liquidity over here. This is a high resistance liquidity sweep, guys. High resistance liquidity sweep is then when the market fails, instead the market sweeps the resistance, previous resistance over here, and tries to break structure towards the downside. This is usually a high resistance liquidity sweep. But what you need to remember is that you should always try to plot the fair value gap also, guys. You can see there is a fair value gap above here. So whenever the market comes back also, you could expect the market to come and reach this fair value gap also. And what I have thought is that after the market swept this high resistance, and this resistance level is a very strong resistance since it even broke these levels. So what I've expected is that the market might continue all the way to these levels and reject price from these levels. And that's what happened. You can see clearly the market came all the way to this order block level, guys. You can see. So if you try to plot the order block level, the market came all the way to this order block level. This is the 5-minute order block level over here. So even though there is a fair value gap, what I expected is that the market would come definitely here, reject price from these levels, and you can see a clear chalk formation over here. This is a clear chalk formation where the market swept this resistance level here. You can see this is one buy side liquidity where the market showed some kind of aggressive momentum, rejected price from this level, the resistance level, and continued further selling towards the downside. So what I expected is that the market after this kind of rejection guys would continue further selling towards the downside. And what I expected is the market would come all the way to these levels over here, the fair value gaps over here. You can see the 9 as well as the 21 levels over here, somewhere here, and continue further towards the downside. You can see this momentum and continue further size. And I have also entered a long position here, a short position here, guys. So I will tell you why I took a small stop loss over here. I think a 200 to 300 points of stop loss, guys. What I have done is that after this kind of retracement, guys, what I've expected is that the market might definitely reject price from this level. So I have taken somewhere short position somewhere here, guys, keeping my stop loss just below these levels. Or you can consider this order block level, guys. So the order block level itself. So I targeted it all the way towards the downside. This swing low, or definitely the market would continue further bearish. But what happened, you can see clearly my stop loss here has been hit, guys. So this momentum so I captured, but this here, the momentum what I expected is the market would continue. But here I didn't look into a daily time frame analysis, guys. In case if I would have looked on daily time frame analysis and I would have analyzed what happened here, where the market swept and closed within this range, clearly signifying bullishness. So in a smaller time frame, definitely I would have targeted this high over here, guys. This high here, what happened over here, this is high which I would have targeted, and definitely I wouldn't have taken a short position here and taken my stop loss. So you should definitely be very careful, guys, in case if you might have not exited your position and hold it on to your position, expecting the market to continue further, continue bearish, guys. You can see this momentum where the market targeted all those buyers who might have entered, sellers who might have entered here with this kind of huge momentum towards the upside. So that's why, guys, it's very important to keep stop losses and trade based on stop entry and exit position. Always keep your stop losses very tight, guys. So you can see here there was a very good trade opportunity, and here also there was a very good trade opportunity for you to take. But I didn't wait for another confirmation, guys, where the market would reject here and this neckline breakout, guys. Whenever you need to take a short position, guys, we should always wait for this neckline to break after the chalk formation. Only after this neckline break where you should take short position, keeping your stop loss just above this swing over here and continue bearish, guys. So I didn't wait, guys. I was very aggressive in my entries, and that's what which made me to lose a points over here. So after this stop loss, you could have either taken long position over here and just hold it on to your trade, guys. And you can see how huge the market rallied all the way towards the upside. So this is a trade opportunity, guys, and there are definitely a small many scalps you could have definitely taken, but I would not recommend you to, guys. What you always need to take is at least 1 or 2 trades in bank Nifty, in Bitcoin, guys, and in Indian stock markets if you're trading, you should trade only 1 or 2 trades in a day, and I would recommend you to stick on just minimum 3 trades, guys. If you are like taking 20 to 30 trades in a day, I think it's a very bad sign that you would definitely lose money, guys. So having patience and just take 1 or 2 good setups will definitely help you in a long term, guys. So that's how you could have taken your trades over here, and either you could have taken XL over here, this one SL over here, and one profit, I guess, sir. So that's how you could have captured, guys. I hope you're understanding what I'm saying. So in case if you find my videos helpful, guys, please like, share, and comment. And in case if you want to keep in touch with me, Instagram is the way to go. You can definitely message me over there. I would be glad to respond, guys. Thank you.